Hi, John. How are you this week?
Hey, Elliot. Good. We didn't see much going on. I know FinCEN put out something on ransomware, malware, and the director gave a speech to ACAMs, but there wasn't anything that sort of piqued my interest until you and I sort of ran into this Fed written agreement between the Fed and a Atlantic Community Bankers Bank. I guess remind folks what a bankers bank is, and then let's talk about a couple of the BSA items in this.
Sure. So Atlantic Community Bankers Bank is in Camp Hill, Pennsylvania. And bankers banks generally are formed and owned by other banks. In this case, their target market is small community banks. They're owned by, according to their website, by about 300 of them. And generally, bankers banks provide correspondent services to other banks, again, usually small community banks, that the kinds of services that they may not really be able to provide themselves and would either have to go to a large bank that would be also a competitor or do it through a banker's bank, oftentimes at a lower price. So, for example, this banker's bank offers some international clearing services and international money transmission services. They offer, they do lending to banks for bank stock control loans. They do cash letter settlements and those kinds of things.
Yeah. So what's interesting about this, typically a Fed agreement or consent order, it doesn't have the specificity that an OCC or a FinCEN enforcement action, in my opinion. They tend to be sort of templates, but I thought this one was interesting because of the scope of deficiencies that they have highlighted that Atlantic Community Bankers Bank has to fix, and everything from issues with staffing, with level of experience, board oversight apparently is weak. There's issues with the OFAC part of this. I think this is a great example. It's an 11-page written agreement, a great example that you can learn. It's a good training tool, I think. If you look at enforcement actions, sort of spell out what's required, and some of the things, in addition to what I mentioned, there's gaps in the CDD program that needs to be revised. The risk assessments need to be improved. And I thought some of the things in there that on SAR reporting and monitoring were particularly interesting. But they also mentioned that they need to have a transaction monitoring system validation, I think, among other things, right?
Right. So a couple things that you mentioned. One is that this really does read like, a quick, 8-9 page outline of what you need for a good compliant BSA AML compliance program. Secondly, what they're doing is a little more difficult because a lot of the things they probably have to worry about do have to do with their customer's customer.
Right.
The various community banks that are their owners certainly may have different risk profiles based on their geographies, their own product sets, those kinds of things. But they also are doing certain types of transactions indirectly for the bank's customer's customer. It is interesting. This one does start out right at the top with board oversight, and even talks about the need to identify the appropriate frequency of audit committee meetings and things like that. So, and the validation issue, if you've got a transaction monitoring system and it's been identified as a model under the model risk management guidelines, as many of them have been, then it has a validation requirement on some cycle based on your assessment of its, how risky it is or how essential it is to your operations.
Yeah, and the additional part that OFAC is part of this, again, confirms what we've been saying for such a long time, that, OFAC is certainly an AML-related topic. And it says here that they have 60 days to put a plan together to enhance compliance with the regs. Screening procedures have to be improved, and methodology for assessing OFAC risks or OFAC risk assessment, and policies and procedures that ensure compliance. So obviously, some gaps there that need to be improved, and maybe in some cases actually created. That's what it looks like to me.
Yes, and having had some experience in the past with other written agreements, I can tell you that the resource allocation to creating all these plans, monitoring them, implementing them, reporting on a quarterly basis to the Fed, and the internal reporting that's required is significant. And so oftentimes banks that have these written agreements with the Fed certainly need to bring in outside resources and marshal substantial internal resources.
So take a look at it. It's the written agreement with the Atlantic Community Bankers Bank.
And the Philadelphia Fed.
And the Philadelphia Fed. Thanks, Elliot. Stay safe. We'll talk next week.
Yep. You too. Bye-bye.